Thank you for watching our videos. A notice taxpayers sometimes receive is called a CP2000. In this video, we want to provide helpful information regarding the CP2000 notice and what it means for a taxpayer. So what is a CP2000 notice? You may receive this notice indicating that information the IRS received from third parties does not match the information reported on your tax return. This notice is proposing changes to tax and/or payments and credits that were originally reported on your return. You could also say that this notice gives you the opportunity to agree or disagree with the proposed changes. This isn't a formal audit notification, but a letter to see if the taxpayer does agree or disagree with the proposed tax changes. The taxpayer should respond to the CP2000 letter, usually within 30 days from the date printed on the letter. This does mean that you may have omitted an income source such as a 1099 or W-2 from your return, or the IRS is making other changes that affect the tax liability. What does it mean if they don't match? Well, if there is a difference in the income reported on your return and what was reported to the IRS, it could mean an increase in the amount of tax due. So you may be wondering now, do I need to take any action? Well, we suggest that you read over your notice carefully. It will detail the explanation of changes the IRS has proposed and the time frame from which you should respond. The CP2000 notices states that it is not a bill. However, assessment will ultimately be made if the proposed changes are uncontested. You also need to be aware that you cannot expect that this will be sorted out through a phone call or that the IRS will resolve this in your favor without a response. Your next action should be to respond by the deadline regarding the accuracy of the proposed changes. If your original tax return is accurate, you will need to provide an explanation and possibly supply additional documents to support your position. If your tax return is not accurate, you will need to address the error and determine if there are any legitimate disputes to the proposed changes. We've discussed a lot, but don't panic. We have some things you may want to do. You want to seek assistance navigating this discrepancy. You want to also keep a copy of your notice. Make sure you have that ready. Correct your copy of your tax return in your records if there was an error. Review any payment options if a tax amount becomes due, such as an installment agreement. And you may want to research or obtain help with an offer in compromise if a tax amount becomes due and you're unable to pay. If you're not sure what an offer in compromise is, we do have some videos going over each of the three options. It's always good to prepare for the next year. Some tips for next year are: keep accurate records. Wait for receipt of all income statements and tax documents before you file. Review all your tax documents from your employer and financial institutions for accuracy. Ensure you have included all your income on your tax returns. And finally, if you receive information after you file your return, file an amended return to include the additional information. This information was provided in part by the IRS on their website, irs.gov. For more information about CP2000s and frequently asked questions, please follow the link in the description to the IRS website, or check out our website provided in the description. Thank you again for watching our informational tax videos. We hope you found this video helpful and informative. We invite you to like and follow for additional videos about tax resolution and more. WatchGuard Tax Services. Welcome to the solution.